I'm Charlotte McLeod with investingnews.com, and here today with me is Edward Sterck, Director of Research at the World Platinum Investment Council. Thank you so much for being here. Great to have you as always.
Thank you, Charlotte. It's great to be on.
Really good to be catching up with you. And of course, what we're going to go into today is the WPIC's latest Platinum Quarterly, which is just coming out. So one of the notable things that stood out to me when I was looking over it is that the deficit forecast for 2024 has been revised upward to 476,000 ounces, I believe. So I thought we could start and just look from a high level. Of course, we'll go into all the supply-demand nuances, but from a high level, what led to making that change?
So there's a couple of things. Firstly, on the supply side, there are additional challenges that are facing the industry, both in South Africa, also in Russia, and actually more broadly in terms of byproduct production from nickel operations. So a little bit of a downward adjustment to that, about 20,000 ounces. And then otherwise, just sort of general upward revisions to investment versus previous expectations, and also some slightly higher numbers in terms of broader demand. So it's a lot of small changes. We've only gone from 418,000 ounces, I think was our previous figure, to, as you said, 476, but it's little bits and pieces here and there.
Okay, and I'm going to move over to supply. I think usually I put supply toward the end, but I'm going to put it first this time and see how that's looking. So what stood out to me there was supply came in second lowest in the time series that you look at. So I'm wondering if you can add context on how mine and recycling supply played into that.
So for mine supply, we've just seen a gradual erosion of output over the last few years. So this is a bit of an ongoing theme. In terms of total mine supply, it's down 3% year on year. It was expected to be down 3% year on year for this year. The factors that are playing into that are ongoing sort of operational challenges in South Africa to a degree, where the recent and rather dramatic fall in the prices of palladium and rhodium, which are produced as byproducts of platinum, have just eroded the economics of operations at the top end of the cost curve. Now, we haven't seen any dramatic changes yet in terms of closures and things like that, but we are seeing a number of restructuring announcements, which include which effectively are trying to reduce costs. Included within that are some unfortunate job losses, and the outcome of that is just really reduced operational flexibility. So where in the past, for example, if a mining company had mined in an area and happens to encounter a geological interruption, they might have been able to take that work crew and move them elsewhere. Going forwards, the flexibility to be able to do that is probably reduced. Also, you've got in Russia the impact of ongoing sanctions against Nornickel, well, not against Nornickel, but against Russia as a whole. The impact of that is for Nornickel. They've got reduced access to Western mining equipment. They've pivoted to China to get replacements for that equipment. But overall, their guidance is just that they're kind of struggling to sustain output. They've also got a big smelter rebuild that's planned for this year that's reducing their guidance. And I guess also, to a degree, there's some question marks as to how easy that smelter rebuild will be without access to Western engineers and so on.
Okay, good to go into that. And, when you talk about second lowest in the time series, I'm wondering if we can look back a little bit historically at that. So thinking about what is the time period that you're covering there, and when was that lowest supply?
So our time series goes back to 2013, so a little over 10 years. You're now challenging me on the numbers. I'm going to have to double check this because I don't. Yeah. So the lowest was COVID, is the answer. So for understandable reasons, output in COVID was significantly reduced.
Okay. Should have thought of that myself, but thank you for looking up that number. Okay, so I think that covers supply to a degree at least, and let's move over now and take a look at demand. So on the demand side, automotive demand reached a 7-year high in the first quarter. And I believe that's partially at least because of EVs losing some ground. So I wonder if you can talk about that and the extent to which platinum could benefit moving forward.
Yeah, so we're seeing a lot of consumer reluctance to make the switch from internal combustion engine vehicles to full battery electrification. So to put some numbers around that, in terms of market share, In China, which is the biggest market for battery electric vehicles, things seem to be stalling at around 20 to 25% market share, depending upon the quarter. In Europe, it's sort of in the high teens, close to 20%. And then in North America, it's sort of in single digits, sort of 7 to 10% market share. So that just reflects an ongoing consumer reluctance to make the switch. And I think the rationale behind that for consumers is that you don't have the subsidies or the tax incentives that were available to the first or early adopters to make the switch to battery electric vehicles. And then there's range anxiety, there's infrastructure anxiety in terms of the ability to recharge your vehicle. And so people are kind of trying to stick with what they know, which is mainly internal combustion engine vehicles. Now, that said, they are prepared to make a switch to partial electrification. So we're seeing the fastest growing segments now are hybrid vehicles. Now, those can be plug-in hybrids, or in China, the fastest growing segment is what are called extended range electric vehicles. So these are battery electric vehicles that contain an internal combustion engine as a generator. Unlike in plug-in hybrids, they don't actually drive the wheels. All they do is charge the batteries. They're highly tuned for a particular task. They run at a constant RPM, but you still need to treat the exhausts from those engines. So you need platinum that goes into those. So I think the kind of impact here really is that what we're seeing is potentially a higher for longer environment for platinum for automotive end users. And that's something that is right now a bit of a focus for investors. So we're getting incoming interest from investors who've sort of had the received wisdom that everyone's going to be driving Teslas by 2030. And now they're looking at this going, well, maybe we won't be. And so these sort of commodities that perhaps lagged a little bit might be worth re-looking at.
Okay, very interesting. And we've talked in past conversations about recycling supply, and that has been lower because of fewer vehicles in the pipeline. So as this happens, could a follow-on effect then be that we have more recycling moving forward?
So we've got a 5% recovery in recycling in our numbers this year. But to put some context around that, 2023 was an exceptionally low year for recycling. So it was around 600,000 ounces below the sort of long run average, which is, given it's only at 1.5 million ounces, quite a big number. That 5% recovery, therefore, is actually a fairly small number. Now, that said, overall, the challenges that are facing recycling are a shortage of end-of-life vehicles, which you touched on, but also some regulatory headwinds in China and in the US. Now, all of those things are probably solvable in time. So our base case assumption is that we will see recycling recover to those historical levels. But the timing of that recovery is hard to call. It could be slower, or it could be faster than our base case estimates. I think beyond the scope of our quarterly, in our longer term research, we expect to get back to roughly around 2.1 million ounces by 2027. But if it's slowed down at all, that changes the dynamic quite a lot. It means for platinum, deeper market deficits. And if you're looking at palladium, then potentially the tipping point into surplus is more like 2026, 2027, rather than sooner than that.
Okay. Of course, many factors going on there. And if we shift over now to industrial demand, so from my understanding, 2023 we had record levels, and 2024 it's looking like will remain strong, but not at those very high record levels. But one of the interesting things that I noticed in this report is within that industrial category, you've added a line for hydrogen. So we've talked before about the importance of hydrogen to the platinum story. So I'm curious still, why was now the time to break it out in that way?
The time to break it out because we're getting towards meaningful levels. Now, I should stress that what we've broken out is only stationary applications. So that's electrolyzers and stationary fuel cells and some sort of other downstream uses of platinum within the hydrogen industry. So fuel cell electric vehicles still sit within our total automotive demand bracket and are not split out. So real hydrogen or total hydrogen demand for platinum is actually higher than the number that we've broken out today. That number for 2024 is 75,000 ounces. That's up 118%, I think it is, from 128% from last year. So it's growing off a small number, but very rapidly. And I think that's the point. It's only around 1% of demand for this year, but it is growing quickly. So it's now the time to be able to kind of give everyone the numbers and see how that evolves over the next couple of years.
Okay, makes sense. And thanks for the clarification there on how that's actually working. So, jewelry demand, it looks like it was up 5% in Q1, but with 53% growth in India. So, to me, that sounded quite large. And I wondered if you could go into what you're seeing there.
Yeah, I mean, flat as the new up has been my mantra for jewelry for quite some time. So this is the first time I can actually talk about it with some, more positivity. But yes, we're seeing kind of a broad-based recovery in jewelry, even in China, which used to be the biggest end market for jewelry, but has been steadily declining for years. This year, we're expecting a modest recovery. But as you pointed out, India is really the standout geography in terms of increasing demand. Up 53% in the quarter. Our forecast for the year is a 28% year-on-year increase. So what's driving that? Well, for the most part, it's actually a very successful promotional campaign run by our sister organisation, the Platinum Guild International. So their mandate is promoting platinum jewelry. A lot of the jewelry in India is for men, rather platinum jewelry that is for men rather than for women. And the Platinum Guild International have sponsored some Indian cricketers. Cricket is quite popular in India, and so that's helping support demand. But it's not just a domestic market they're addressing. They're also fabricating in India for export to the Middle East, and actually also for the US as well. So, I think it's just it's too early to say that this is going to be an ongoing trend, probably for India, but certainly it's encouraging. And it is a market that, as we know, is huge for gold. And potentially just taking a small bit of that market could be quite a big thing for platinum.
Okay, well, I'll hold off on getting too excited just yet about that. So, if we look now at investment demand, I'm wondering if you can break down what's going on between foreign coin and ETF demand, because it looks like there's some quite interesting dynamics going on there.
Yeah, so the numbers that we've factored into this quarterly update are fairly modest for investment demand, so down quite substantially year on year. In bar and coin demand, that's a product of our expectation that we won't see a platinum eagle being produced in the US. That may change. That's just kind of the base case assumption at the moment. So relatively weak demand as a result in the US. We do expect part of that to be offset by increased sales of Canadian maples and Britannias from the UK, but not to completely fill the gap. There's also expected to be weaker demand in Japan, and that's a product of, in yen terms, actually really high platinum prices, so some sellbacks there that offset purchases. Positively, we're actually seeing really strong demand in China. So a bit like hydrogen, we've split out Chinese bar and coin investment demand this year. Last year, we have identified 52,000 ounces of bar and coin demand. This year, the number is 60,000 ounces. And these are only for bars and coins that are less than half a kilo or 500 grams in size. There are additional sales that are identified in larger sizes that don't make it into our data set. So bar and coin demand has the potential, as things evolve, to potentially grow higher if those larger bar sizes in China, identified as investment demand and do come into our data set going forwards. The other thing is ETF flows. So the base case assumption at the moment is, because of the higher for longer interest rate environment, non-yielding assets are less attractive. And that includes any commodity, gold, silver, platinum, copper, what have you. These are non-yielding assets. And so in the hunt for yield, they tend to be less favored than alternative options. As a result, in our base case numbers, we've got ETF outflows of 120,000 ounces. That said, just in the last couple of weeks, we've seen inflows into the ETFs of almost 280,000 ounces. And so between now and when we talk in September, our investment numbers have the potential to change quite a bit. There's definitely quite a lot of investor interest in platinum at the moment.
Okay, very interesting. So we'll keep an eye on how that looks for the next time. So reading through the report, there was a really good takeaway or quote. I'm not going to read the whole thing, but I'll give the gist as I understood it. And essentially, it sounds like fundamentals for platinum are really quite good right now. They're the best they've been in some time. But the sentiment among investors is just not there. So I'm wondering if you can expand on that a little bit.
Yeah, so I think there's two things, and I touched on one of them earlier, which is the kind of received wisdom about battery electrification and that the flow through impact on automotive demand. But the other thing has kind of been historically, platinum and gold have sort of traded to a degree in step. Gold's obviously recently been at all-time highs, come off a little bit, but platinum hasn't participated in that significant rally. And so some of the question marks are, well, if platinum hasn't participated, then surely there's something wrong with it. I think what we'd say is that if you unpack the investment flows and just look at what's happened with ETFs and other forms of investment, actually platinum and gold have tracked each other really, really closely in terms of the trend of volumes. So the distinction has been central bank buying, where platinum doesn't fit into the sort of asset allocation process for central banks. Gold has benefited quite significantly from central bank purchases, and that's been one of the things that's elevated gold's price. So gold's the outlier here, not platinum. In terms of the underlying fundamentals for platinum, I mean, clearly they're extremely strong. We've got 2 consecutive significant deficits, highly constrained supply that's likely to continue for the future. Got pretty robust demand that's also likely to continue for the future, and it's actually quite price inelastic. So going forwards, what's happening is we're seeing a rapid depletion of above ground stocks. By the end of the second half of this, at some point in the second half of this year, we get to below 6 months of above ground stocks in terms of demand. And in sort of classic commodity economics 101, at around the 6 month mark in terms of above ground stocks, that's when you begin to see above sort of tightness come into the market and begin to reflect in price. So, we think platinum has been a bit out of favor for the automotive reason, and because it hasn't done what it used to do historically and track gold. But that as the year unfolds, we'll begin to see the true underlying fundamentals begin to be reflected in price.
Okay, I think you're very right about it not being the outlier, because I think I'm having very similar conversations when it comes to silver versus gold. And so just to sum up a little bit, if you want to know where the price is going to go, is it the above ground stocks that you really want to keep an eye on?
Oh, I mean, there's a lot of indicators one could look at. So the futures market, if it's in contango or backwardation, obviously backwardation shows that there's a shortage of material in the prompt market. There's also lease rates. Those aren't necessarily freely available, but you can kind of impute them from data from various different data sources. So if we see elevated lease rates, the market heading into backwardation, that says that there's a shortage in the prompt market, and that should reflect itself ultimately into higher prices going forwards.
Okay. I think we're all waiting to see when that will happen. So we'll keep an eye on that as well. And just as we're wrapping up, so as we've been talking about, there's from the WPIC 476,000 ounce deficit projected for 2024. And we also recently got a forecast for the year from Johnson Matthey, and it's close to 600,000 ounces. And of course, those are both very big numbers, and different entities will have different ways that they look at the market. But I think it's interesting. Investors are probably looking at them both. And if you could shed any light on how the different numbers might come to be.
So I only saw the Johnson Matthey numbers yesterday. I haven't had a chance to fully unpack them yet, I'm afraid. But there are some slight differences in methodology, particularly when it comes to when ounces are being counted effectively. So whether it's on purchase or whether it's on use. We work on when things are actually deployed or used or put into vehicles, for example, in the automotive industry. And I think I'm right in saying, I might need to double check this. I think JM works more on when purchases are being made.
Okay. Good to go into that. Well, I will let you go, but before I do, I'll ask if there's anything else that you would pull out from the report that you would want investors to notice about platinum right now.
I think the key thing really is just going back to that automotive story, and where investors are interested is in the potential for higher for longer automotive demand, and that really sort of changing people's view versus that received wisdom of constant and ongoing battery electrification. I mean, we are going to electrify. It's just the pace at which that happens that's being questioned.
Okay, very good. Well, thank you so much for taking the time to go over the report, and we'll of course be checking in with you again in a few months. So thank you again.
Thank you, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Edward Sterck. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.